There are 10 minutes remaining until today's closing. Bell, helping us to really break down today's market moves. We've got a batch of folks for you. Adam Johnson and Zara Burton over on our news desk. Trader Dan Deming of Stetland Equities out in Chicago at the Chicago Board Options Exchange. Also with us, Joe Saluzzi, co-head of equity trading over at Themis Trading. So, market's looking pretty good here.
Well, I mean, if you believe the tape, yeah, it is looking good. And look, every time we come
lying for a year.
Well, look, the problem with the tape, we'll call it that, is this: it's a momentum-driven market right now. Everyone's jumping on board.
There's not a lot of volume, not a lot of momentum.
Well, that's one of my issues. And right now, this is a very fragmented equity marketplace. What I do during the day before I come over here is I trade for institutional clients, and my job is to make sure they don't get caught up in the traps that are laid all day long by these, let's just call them algorithmic players that are out there. So, but what we see is a very light volume morning normally, jacked up really fast by a couple of programs that come in, and then you get kind of like this churn throughout most of the day. There's not a lot of conviction going on there, and most of the people that we speak to are still very bearish fundamentally, but you can't fight the tape, and Dan's going to tell you that probably soon, that it's a momentum type of market. You want to go along with it, but, Dan, we got to be honest here.
Dan, I mean, Joe makes a good point.
You're nodding.
I mean, the VIX still.
Just look at the VIX.
I was just going to say the VIX is still under 20, but we forget a lot of times that 20 used to be a really high number for the VIX.
That's correct. But my problem is, part of my problem, I got many problems, but that this market is built on lies and rumors. And yesterday is a perfect example of a rumor-driven tape. Oh, we're going to ban short selling on AIG, and I mean, that was a joke. But let's talk about some of the lies and outright facts that were misrepresented. The unemployment number, when the government kind of guided, saying, oh, they're going to be worse for weather. They weren't worse, okay? And then even after the fact, they tried to say, oh, but you would have had a lot more jobs. It had been no snowstorms. But then the BLS came out afterwards and said, no, that's a lie. Because you can't count them that way. If you miss one day, it doesn't mean you're out for the month. Okay, it's a snowstorm.
Greenlaw said if you take out the weather effects, you'll see a gain of 100,000 last month.
That's not what the BLS said, okay? And I looked at the BLS memo that they had on their website.
What are you expecting for next? A lot of people are talking next month about 250, 300,000. Jan Hatzius.
Well, you have to catch up for the snowstorms, right? I mean, then you have these census workers and everything else. But I'll tell you
compared to what we've seen over the last year,
again, but you've got about 8 million more to go, okay, when we get there. But one of my other problems...
But the trend line has changed.
No, now we're flat, right. Instead of going down, we're flat.
But we're not going down.
But you're still not growing jobs. You're still not getting... You don't have that robust
flat
economy.
Flat is great coming out of you.
Well, flat still.
We're no longer going down the stairs?
Yeah, you're in the basement still. You're stuck, right? You're never going up those stairs.
Wait, Dan Deming.
You guys, I know, it's so funny. Oh, you're focusing on unemployment. There's other things out there. I mean, Joe, there is the fact that manufacturing is showing signs of growth also. I mean, it's over, at least it's growing, it's over 50%. So we're seeing some good numbers there, at least improvement on the numbers. Not to mention the fact that GDP, is still coming in, at 6% the last quarter, much higher than was expected a year ago. So even though the market, yes, you and I agree, I think that the market has a tendency to get ahead of itself. And I think right now it's running into an area where it's going to struggle. But at the same time, we are seeing some of the fundamentals in the economy showing signs of growth.
Joe, he's right.
Well, you're going to see some numbers, right? And some of these, look, you've got an economy.
Expectations.
Well, let's look at this.
Doesn't the market look cheap?
Hold on.
Respond to what Dan said.
I'm going to respond. The only reason why you have any sort of life is because of the nonstop government pumping of the printing presses. Let's see how the economy does if it was left alone. Let's see if you raised interest rates, what would happen just a little bit. The savers of this country, the savers who are getting 0%, this is the biggest injustice I've ever seen in my life, are financing this bank bailout. It's been going on for 2 years now, and nobody seems to care. Look, the economy would be a total disaster if it wasn't for the stimulus, which is why they're not going to stop. And I don't doubt Mr. Bernanke. He's not going to stop.
Let me just take a moment to look at the markets, and then we'll talk about what would happen when they start to raise rates just a little bit, when they stop buying. Joe has a question.
It's a joke. Come on. These guys are a joke. 14 buys, no sells. Does anybody see any problems maybe with health care down the road? Does anybody have a difference of opinion? Are you all but sheep? The sheep that run through the Wall Street jungle? It's a joke.
It could be that they don't see health care passing, which was...
Well, I don't know what this is, but you would think that 1 out of 14 would have a different opinion. Okay, they're all the same, and that's part of my problem as well. You don't see any divergence amongst opinion now. Everybody's on the same bandwagon, up, and up, but they fail to look at the real problems. And now the latest thing is they all want extra yield, right? There was an article the other day.
It makes sense if there's not going to be health care reform. These guys are going to do better.
I mean, Adam shows what they did over the past year. I mean, if 14 of them liked it, and we saw a rally over the past year, so somebody made money on this.
Well, that's a good point. Hey, Matt. Hey, Matt, check it out. If you look, in fact, at the chart of the stock over the past year, up about 86%. So obviously the market jumping on here, that's part of the irony. You got Washington all over these guys, and yet the stock is going up. Part of that has to do with the fact that earnings, if you go back literally the past 10 years, earnings are up 10 to 20% every year for the past 10 years. But, of course, there comes a point at which if you're up in prices 39%, yeah, your earnings are going to go up. Can you actually get away with that,
you got Washington all over these guys, more like you got these guys all over Washington, right?
Sure, they were you bet. They're spending
Dan,
a lot of money.
Listen, we're talking a lot about healthcare here. You know, come on, weigh in on all of this.
Well, you know what? I think, again, one thing that you've got to account for is perception that's in the expectations that are in the marketplace. You know, Joe, you and I know this, that, again, the fundamentals are one thing, but the perception and the expectations are a completely different thing, and they do drive the markets for a time, you know, here and there. And we're seeing that right now. We're seeing the path of least resistance right now is higher. It kind of goes against the fact that I think there are a lot of bearish people out there, and I think there are a lot of sellers here at this 1150 level in the S&P 500 index. So it almost self-fulfilling and pushes it through there. Now, that might take out this, that might be the catalyst that might drive us back down. But again, it's
Dan's talking momentum, and that's exactly the way you're supposed to be looking at trading. And you're absolutely right, Dan, but eventually fundamentals will matter. Eventually people will say, why did we put a 15 PE on those earnings when we're in an economy that's still contracting if it wasn't for government stimulus? Eventually they will come back to reality, and then we'll all wonder why we were doing that. But Dan is absolutely right. You follow momentum. We did see today on some of the sell-offs intraday, the volume was a lot heavier on the dips, which tells me people have their fingers on the exit button. They want to get out. I have a friend of mine, Danny Clark, who gave me a great explanation. He called it the Jason Bourne market. You see, when he goes into a room, first thing he checks for is the 3 exits. How do I get out? That's what investors are doing.
All right, let's talk a little bit about what investors are doing, because we've just got about 30 seconds left. Let's go back to our guests. We've got Joe Saluzzi and Dan Deming out in Chicago. I want to throw this out to you because we're talking about fundamentals. It's important to see fundamentals improving. We talked about we had some inventory data today, unexpectedly falling in January, second month. You know, companies are having a tough time keeping up with demand. And so we're going to see some, you know, it's a sign of there's demand in the economy. They're going to have to ramp that up, improve those inventories, hire workers.
Well, that's a great sign, and that's a good point, and you'd like to see some more of that. But the flip side of that argument is that if you start to see an economy that improves, then you take away the stimulus. If not, you're going to have inflation.
Well, don't you just kind of feel like, Joe, that the government is just quite we're just kind of waiting to make sure that the timing is key, because if they do it too early, fair to say that we'll fall back into potentially another recession.
The student of the Great Depression, Ben Bernanke, says he's not going to make the same mistakes. He'll just make new mistakes this time. Okay, but look, you can't keep doing the same thing that they're doing. They've been buying mortgage-backed securities, propping that up so the banks can make free money.
But the Fed is starting to unwind some programs, so we're starting to see that.
But they will create new programs. My bet is that they will not stop buying mortgages at the end of March. They'll just create a new program, and they'll, basically hide it. Housing is a disaster.
Housing's still a tough one, but you know what? And I got to throw this to Dan. You know, the Keynesian approach to dealing with, you got to slide it up your lapel there. You're being drowned out by the 46 people on the floor.
Wait, listen, I got a viewer a personal user. He says, I feel like Joe is one of the few straight shooters out there. Not easy being the contrarian. I'm sure he would like to be more positive. Would you? I find that hard to believe. Would you like to be more positive?
It's so easy to swim in upstream. You know, I'm going against the current, right? It's brutal, and it's so easy to go the other way, right? But because
no offense, and I'm going to get viewers who write in who are going to say, if I listened to Joe, I'd been losing a lot of money over the last few months.
But I also do tell you, don't fight the tape. I agree with Dan 100% that you cannot fight this, but keep in your mind, keep it in the back of your mind that what we're doing right now is pretty fictitious. This is not real, in my opinion. I do think there'll be a time to pay the piper, and it's probably, I don't know when. I can't tell you, on June 10th is the day to sell, or in September.
But if you see things really start to turn around, are you going to be able to actually come out and say that? Because a lot of guys with this kind of convictions that you have stay that way forever. I mean, we had David Tice on yesterday.
Well, David's made a great career out of it.
My buddy Gary Schilling. A lot of these guys, I'm not going to say that they're a broken record, but they haven't changed their viewpoints in quite a few decades.
Well, that's true, because you
like
can always,
a broken clock.
But what's nice about that, similar to short selling, which some people tend to gravitate against, it at least gives you a different side of an opinion. If David Tice would have come in here and say, listen, this is what's bad. Like Dan just mentioned the deficit numbers. Well, what's so good about $200 billion a month in deficit? I know he just mentioned there was a 23% positive increase in revenues, but I could always tell you something different, that for an investor, he should see both sides of the coin.
But it's a change in the trend. I mean, Dan, right? It's a change in the trend. We want to back to Dan and Joe. We go. Joe, I saw you shaking your head. So it's not going to be a crackdown on the financials?
As long as there's a bank lobbyist in Washington, you're not going to see. No, you're not going to see anything.
Do you think the lobbyist had any hand in writing that regulatory reform?
Yeah, hello. I mean, come on. This is the way it works. We all know how the game works, right? As long as they're out there, you're going to see a very very tempered response. They're going to give you a little just to chew on, and everybody will say, oh, look, we got this great regular. It's not going to be anything.
Hey, Dan, if Joe is right, I mean, that's good then necessarily or potentially for the markets. We all talk about kind of gridlock in Washington. That's good.
Certainly.
Of course.
Yeah, right?
No,
but long term?
Well, long term, I've got other issues with regulatory issues, and I think more of a market structure. We talked about this a couple of times, the equity market structure, which is a fragmented electronic marketplace. Now, that is a real big problem, and that needs regulatory addressing. Senator Kaufman, one of the few people in Washington actually looking at these things. Then we've got a story, because if you change the structure of the equity markets, you're not going to have this fast money momentum that you see during the day. But it's not going to happen. So
let me quickly ask.
I also would like to say that I think that some of these things out there, particularly like the CDOs.
Right, hey, Dan Deming, thank you so much for joining us. Always a pleasure to have you on, especially when Joe is here. Dan Deming, let's do this again.
You two, perfect.
Joe Saluzzi,
got a root canal scheduled next time.
From Themis Trading. We're going to take a quick break here on Bloomberg. When we come back, we'll talk more about jobs.